Okay, let's get started on group chapter 15. I've made the screen just a little bit bigger. There's a bit of data in here. This isn't a huge practice problem, but it's certainly not one of the smaller ones either. Let's just see if we can follow along here. Marcelino Company's March 31 inventory of raw material is 80,000. Raw material purchases in April are 500. Factory payroll costs in April is 363,000. Overhead costs incurred in April are indirect materials of 50,000 and direct labor of 23,000. Factory rent of 32,000, factory utilities of 19,000, factory equipment and depreciation of 51,000. Their predetermined overhead rate is 50% of direct labor cost, and job 306 is sold for 635,000 cash in April. Cost of the 3 jobs worked on in April follow. So it looks like we've got jobs 306, 307, 308. They've given us some data here to deal with, and it appears that at the end of the month, job 306 and 306 was finished and sold, 307 was finished and unsold, and 308 was in process. They've got question marks for applied overhead, so I'm already guessing that we're going to have to calculate that one. Let's just talk about it right now if we can. It says here the predetermined overhead rate is 50% of direct labor cost. Well, so if we had to figure out what applied overhead is, really all we have to do is consider 50% of this direct labor number. So 50% of direct labor for job 306 would mean 42,500 in applied overhead. This one would have 75,000 in applied overhead because we would want half of 150,000. And then this would have 52,500 in applied overhead. So we come on down to the chart and it says determine the total of each production cost incurred for April, direct labor, direct material, and applied overhead, and the total cost assigned to each job, including balances for March 31. So nice enough that they've brought this information down here for us. That's cool. And what we see is that this is March information, right? And then April starts here. So think about this. Here's a job that was ongoing in March, but the accounting cycle ended, and now it's still ongoing in April before it is finished and sold. And that's really kind of what's happening. Job 308, I'm going to run back up, had no cost in March, meaning that it started at some point in April. It really didn't have anything up there in March at all, so nothing we have to worry about. So it's asking us for beginning goods in process. That's work in process. It's the same thing. It means the same thing, right? They're synonymous, goods in process and work in process. So what are they asking for? Well, I think they're just asking us to add this up. 29, 20, and 10 is going to be 59,000. And then if we did 35, 18 plus 9, we're going to have 62,000. And of course, job 308 had nothing in March. So that one was pretty simple. So it's bringing some information down here for us. When we come down, it says, all right, how much is applied overhead? Well, the applied overhead for April. And by the way, you can see it up here. Applied overhead was half the direct labor. Half the direct labor. Well, that means that we need to apply half of the direct labor because their rate is 50%. We just went over that number, but it's 42,500 for job 306, 75,000 for job 307, and for job 308, it's 52,500. So what's happened here is it says, all right, well, you add these things together and you've got your total cost for April. Here's my total cost for the beginning of the month, basically whatever it was in March and any time before that, really, what it was for March. And now we're going to add this in April. So it says, what's the total cost of job 306 as of April 30th? Well, that means it wants the beginning plus what you added in April. So we're going to add 59,000 to 262,500, and that gives us 321,500. We come over here to job 307, we add 62,000 to 445,000, and that gives us 507,000. And then, of course, there was nothing to add to job 308 from March, so it's just the 257,500 from April. Okay, here's our status again, and it says, all right, well, if it's finished and sold, where is this 321,500 on the books? Well, remember, the way cost flows work is it comes from product cost. It goes from raw material and direct labor. All that stuff goes into work in process. That's what this is work in process. But then when it's finished, it goes over to finished goods inventory. And then when it's sold, it goes from finished goods into cost of goods sold. This one is finished and unsold. And if you followed that cost flow, that means it's in finished goods inventory. And if this one is in process, then we are talking about work in process inventory. Okay. The good thing about YouTube's and Connect group work is that if you need to pause me and go back, you certainly can. So I'm just going to keep on going. We roll down here and it says, prepare the journal entries for the month of April to record the above transactions. It says, record, and we're going to have to go back and forth with the required information on this one. There's no question about this. So this first one says to record the entry for materials purchases on credit. All right, well, even without the amounts, right? And we'll go back and find the amounts in a second. What are my debits and credits going to be? We're purchasing materials. Anytime we purchase materials, it goes to the storeroom. What do we call that account? It's called raw materials inventory. And if we purchase it on credit, meaning we didn't pay cash for it, we're going to pay it later, you should know that we call that accounts payable. I just got to spell it right. Now we need the amount. So let's go see if we can figure it out. Am I going to find my direct material purchases anywhere in the chart? And the answer is no, because these are direct materials that I took from the raw material storeroom and brought into work in process. So that's not my raw material purchases. It's not going to be anywhere here either, but it is up here. And it says that we had inventory and raw materials of 80,000 and that we purchased in April $500,000 worth of raw material. Okay, so that's the number we're looking for. We want 500,000 as the debit and 500,000 as the credit. All right, record the direct materials used in production. Okay, so direct materials used in production, that means we're talking about what was taken out of raw material inventory and put into work in process inventory. Well, if it went into work in process inventory, then work in process inventory has to be the debit, and raw material inventory is declining, it's going down. That's got to be the credit. Where do we get the amount? This is the direct material that actually came out of the raw material storeroom in April and got applied to work in process. Well, this is work in process, and here's direct material. And it's saying that we took 455,000 out of the raw material storeroom and put it into work in process. Okay, so 455,000 debited into work in process, 455,000 credit raw material inventory. All right. Next one says record the direct labor paid and assigned to work in process inventory. Same thing. I'm putting something in work in process inventory, right? And this is saying record the direct labor paid. So is it a payable? No, it's cash. We actually paid it out. It says accounts payable and it should say cash. There we go. So work in process inventory will be the debit, cash will be the credit. What's the amount? Where do I find that? How much labor did I put into work in process? Well, here's direct labor, and then here's all jobs, 340,000. So come on down here, 340,000. Okay, should feel fairly simple so far. All right, let's record this entry. Record the indirect labor paid and assigned to factory overhead. The indirect labor paid and assigned to factory overhead. Okay, anything that goes into factory overhead is just factory overhead. This is where things get a little bit different from 211 to 212, or accounting 1 to accounting 2, is because now when we pay things like rent for the factory, it's not rent expense, it's factory overhead. And when we pay for the supervisor's salary, it's no longer salaries expense or wages expense, it's factory overhead. If it happens in the factory and it's not direct material and not direct labor, it's factory overhead, period. So let's just go ahead and get this part. We know we're going to have a debit to factory overhead. And did it say we owe them or we paid it? It says we paid it, so that sounds like cash. We just got to go figure out what the amount is. Let's see what we can find on that. So does it say where we paid any indirect labor? And sure enough, in April, overhead costs incurred in April are indirect materials of 50, indirect labor of 23,000. So that's what we're looking for, is the 23,000 for here. All right. Then it says record the entry for overhead cost applied to work in process inventory. Okay, again, we're putting something in work in process inventory. If you just kind of read through and think what they're saying, if we're putting something in work in process inventory, it's got to be a debit, and it's saying that we're taking it out of overhead. We're applying overhead into work in process inventory. Okay, well, that's just factory overhead. I'm taking it out of one inventory type account and putting it in another inventory type account. We're talking about the overhead applied. That should be in our chart. So here's April, here's applied overhead. I come across, it's $170,000. So 170. Okay. Record that entry. Record the cost of indirect material used. Okay, we can do that. Now, before, when we had direct material, we put it directly in work in process because that's because it was directly traceable. This is indirect material. So where do you think indirect material should go? And if you guess factory overhead, you'd be right. Because again, I hit my tab too soon. Sorry. Again, if it's not direct material and not direct labor, it's factory overhead. And where do you think that indirect material comes from? All material, whether direct or indirect, is going to come from the raw materials inventory. We got to go find how much that was, though. I think that's in the paragraph, so I'm going to go to the required information. There it is. April indirect materials are $50,000. So 50,000 going into factory overhead and 50,000 out of material inventory. Okay, number 7 says record the cost of factory utilities paid in cash. Let's go get the number for a change this time. Factory utilities. Let's see. By the way, it says overhead costs incurred in April are, and here's factory utilities of 19,000. Factory utilities, 19,000. And what is it? Well, is it direct material or direct labor? Nope. So what's it got to be? It's got to be factory overhead. Again, I have to be able to type. It's 19,000 was for the utilities, right? And does it say that we paid it? And sure enough, it does. So cash, 19,000. Factory overhead and cash. Record the depreciation on factory equipment. What account do you think it goes to? Is it direct material or direct labor? Nope. It goes to factory overhead. Wow, this is kind of easier when you don't have to think about all those crazy accounts. And then where do we always credit depreciation? In accounting 1, principles of accounting 1, this would have been depreciation expenses the debit, and what is the credit? The credit would have been accumulated depreciation, factory equipment. Need to go find the amount. Factory equipment depreciation is 51,000. Okay. Moving along, it says record the cost of factory rent. Is it direct material or labor? No, but it's factory rent, so therefore it's factory overhead, and it gets paid in cash. Just got to go find the amount for the rent. Let's see, where's the rent? There it is. Factory rent's $32,000. Okay. And then it says record the entry for transfer of jobs 306 and 307 to finished goods inventory. Okay, so what they're talking about here is that jobs 306 and 307 have a cost value in work in process inventory, but we finished them, finished both of them. We need to move them out of work in process to finished goods. Well, if I'm putting it into finished goods, then finished goods has got to be my debit. And if I'm taking it out of work in process, that's going to have to be my credit. So I have to figure out what amounts we're talking about. So we're talking about these two jobs, right? 306 and 307. Here's the amounts, 321,500 and 507,000. They both got finished, so they both had to transfer from work in process to finished goods. You can never go from work in process straight to cost of goods sold. It has to go to finished goods inventory first. If I add these two numbers up, 321,500 plus 507,000, it's going to be 828,500. So 828,500 and 828,500. Okay. Get to number 11. It says record the cost of goods sold for job 306. Well, 306 is this one, the one that's finished and sold. It's 321,500, and they're saying record it into cost of goods sold, right? It says record the cost of goods sold for it. Well, that means cost of goods sold, right, has to be the debit. There's no question. 321,500. But where did it come from? It didn't come from work in process. It came out of finished goods because it has to come out of finished goods. You must stay consistent in that. Okay. And then it says record the revenue from the sale of job 306. Okay, well, hopefully we got paid in cash. Let's see, does it say anything about that? Revenue from sale, go up to the top, we'll just go look. It says that job 306 is sold for $635,000 in cash. Well, we know how to do that. Whoops, I hate it when it does this. It's going to be a pain, but we'll get through it. So what do we get? You should be saying we got cash. Of course we got cash. And we got $635,000 worth. And we know that that is going to be sales. And we already recorded the cost of goods sold on it, so good to go there. Don't have to worry about that. Okay, yes. And then finally it says record the entry for assignment of any underapplied or overapplied overhead to the cost of goods sold. And that's where things kind of get a little bit crazy because we're going to have to do some math. So when we go look at this, we know how much we applied. We took $170,000 out of factory overhead. My question is, what did we put in factory overhead, right? So we've got to go and take a quick look at that. I think we can just probably do it up here. I'm going to pull a calculator up though real fast. Just to have it over on the side. Let's see if we can skinny this down for you. So let's see if we can add up what all of our overhead was. So right here, indirect materials is where it starts. So 50,000 plus 23,000 plus 32,000 plus 19,000 plus 51,000, right? So all I did was I added up all of the overhead cost. This is the real overhead, right? It was 50, 23, 32, 19, and 51. I added all that up, and it's 175,000. That means that we debited factory overhead 175,000. Okay, debit of 175,000. But here we've credited out 170,000. We've taken 170,000 out, which means that we still have a $5,000 debit in that account. We don't want a we need that account to be zero, and it's still got a $5,000 debit. Well, if it has a $5,000 debit, we're talking about factory overhead. If it has a $5,000 debit, we need to credit that $5,000 out to make it zero. The question is, where do we put the debit? We need a $5,000 debit. We know that, but where do we put it? And if you go back to the lecture, you'll remember we just adjust out directly to cost of goods sold. Okay, let's just do a couple real quick check my works in here. We didn't do that on the first part of it. It might not, it's not going to want me to do it. I'm positive that it's correct, but definitely hit check your work on yours. It's because mine is, it looks like I've got a pop-up blocker going, but we'll get that straight for the next one. Okay, so we're moving on down. We want to complete a cost of goods manufactured for the month ended April 30th. This is back to that same old formula. We take the beginning, we add in our purchases or our total manufacturing cost, and we take away the ending, right? That's all there is to it. The thing that's different is that when we do a schedule of cost of goods manufactured, we just kind of move the beginning inventory to kind of this middle line here. What we need is total manufacturing cost. Do you remember the three manufacturing costs, the three product costs that we have? It should be direct material used, direct labor used, and then it should be factory overhead applied, not actual. It should be the factory overhead applied. That's going to give us total manufacturing cost. And then we're going to add in our beginning work in process. So that's going to be work in process at March 31, because the same thing on April 1 is March 31. And then we're going to take away our work in process at the end of April 30. Or the end of April, should say it that way, right? So where do we get these numbers from? Well, they're all right up here. If I go up to the chart, I had direct materials for the month was $455, direct labor was $340, factory overhead was $170. My beginning work in process was $121,000. My ending work in process was $1,086,000, right? Oh no, sorry, not $1,086,000. Where is my ending work in process? The only thing I had left in work in process was this job, $257,500. All right, so let's go ahead and just plug those numbers in without having to scroll back and forth. It was $455,000 direct material. It was $340,000 direct labor, $170,000 factory overhead. Our beginning work in process was $121,000. That's what gave us that $1,086,000. But we take away what we still had left in work in process, put a minus sign there just to make it look a little bit better, and you'll see that our cost of goods manufactured is $828,500. Okay, and then we're almost done. It says compute the gross profit for April. Do you remember from Principles 1 how to compute gross profit? It's not all that hard, right? What do? We're going to take sales minus our cost of goods sold. Well, what did we sell? We sold job 306, right? We sold job 306, right, which had a cost of $321,500. We sold it for $635,000. Thing is, we have a little bit of a problem. $321,500 is not the only thing in cost of goods sold. We need to take a look at that. Let's look at our general journal. What did we put in cost of goods sold? It looks like we put in $321,500, but we also put in $5,000. So our cost of goods sold account is $326,500. $326,500. So if I pull up a calculator, I take the $635,000 in sales minus the $326,500 for my cost of goods sold, and it tells me that I have gross profit in April of $308,500. All right. Last but certainly not least, we come down to how do we present the inventories on the April 30th balance sheet? Well, two of these are easy. One of them is not so easy. So the two that are easy are work in process and finished goods. We can figure that one out pretty quickly. What's in work in process? I'm going to go up to the chart. Work in process has 257,500, right? And finished goods is just this one, the 507,000. 257,500 and the 507,000, right? So let's just go plug those in. 257,500. Get the easy stuff done first, and then 507,000. The one that's a little bit crazy is this raw material inventory, because we've got to figure that out. And I think we're probably going to need to run, I think we're probably going to have to go all the way up to the top, or at least see the required. We'll just go to the top and pull up a calculator on this one. So again, it's that same formula that I've been saying since we started the session. You take your beginning, right? Take your beginning inventory, add in your purchases, right? You can take away the direct material that you used and take away the indirect material that you used, right? I mean, this is just a raw material inventory. Do we know what raw material was at the beginning of April? And the answer is yes, it was 80,000. So we're going to take 80,000 and then we're going to add in our raw material purchases. Well, raw material purchases were 500,000. So plus 500,000, right? And now, how much did we use, right? That's what we've got to consider. How much did we use? I want to hit the equals there real quick. So I know that we used some indirect material. Let's just get that from right here, right? So where is that? Indirect material was 50,000, so minus 50,000. And then we also used some direct material. I had to scroll that out a little bit. That direct material right here, I'm just going to follow that across the line. Direct material was 455,000. So minus 455,000, right? So that was 80,000 from the beginning of April. Add in the purchases of 500,000. Take away the 50,000 indirect material. Take away the 455,000 direct material, and we come up with a response of $75,000, and that is how we calculate our raw material, and that ends our group / practice work for chapter 15.